Okay, now this video will definitely require that you watch it again to absorb the information. It's a lot of information, so if you do want to do it, that's great. Please stick with me on this. It will be worth it. It's hard because it goes against everything you've been told to do for your entire life. In fact, in preparation for retirement, you're told to do one thing. I'm going to tell you to do the exact opposite. In my opinion, what I'm going to share with you is the most important part of a retirement plan, your retirement plan. Here's a question for you. I need you to be honest with yourself. Will your taxes go up or down in the future? If you believe they're going to go up, then my question to you is, what are you doing to reduce this risk? How can our country overcome the tremendous debt that we have, trillions of dollars? Another question is, will the government decrease their spending or increase your taxes at some point in the future? If you are thinking the government's going to decrease their spending, I'll just agree to disagree. That's okay. So what do you think has been the average highest marginal tax bracket since the IRS has ever been in motion? What would you say, 20%, 25%? Oh no, much, much higher. The average is 59%, y'all. That's the average. So if you think it's 20 and 25, please do not think that. Why will taxes go up? Here's a question for you. What are the two largest expenses that the United States has right now? I'll give you a second to think, if you can think about it. Now, if you chose Social Security and Medicare, then you're exactly correct. Have you started to see all the changes that Social Security is beginning to implement, all these Medicare adjustments and different things? Have you started to see disadvantage and different things like that? If you haven't, I'll be happy to show it, but I think you've already seen it. Do you think that's going to get worse, or do you think that's going to get better as more and more people continue to take it? I think it's going to get worse, don't you? Here's a quick question for you. So, Roth IRAs, what have you heard? Now, in my profession as a financial advisor, 99% of advisors will say, no way, you can't do that. You're too young. You're too old. You make too much money. You can't do that. You're wearing a purple shirt, right? So, in my opinion, they say no because they want to make money on a larger and fully taxable balance. The silly part about their decision is that they're wrong on all counts. I don't have time to go through all of the information right now, but what is wrong with this between me and you? Okay? Let's look at a Roth IRA. In fact, I'm going to leave this right here. So let's say you slowly but surely put in, $100,000 over time. Let's say that grows to $1 million, okay, or $500,000 or whatever, okay? All of this growth right here, all of this money, you've paid taxes as the money went in. You made $900,000. The question to you is, what part of this is taxable? The answer is none of it's taxable. Not the $100,000 you put in, you already paid taxes, not the $900,000, and not the $1 million. Isn't that crazy? Now, you were probably told that your contributions to a Roth IRA are limited to your income, your adjusted gross income. Okay? You were not told, though, that contributions inside of your 401k are not based on or limited to income parameters. That's what you weren't told. It was an accidental mistake, I'm sure, but you were told that there were income limits for contribution, but not inside of your 401k. So those of you that have a 401k have some really good news that you just found out about, right? Did you know that your employer would even match your Roth IRA contributions? Giving you free money that's tax-free for the rest of your lifetime. That's awesome. Did you also know that converting from traditional IRA, your before tax, to Roth IRA has no limitations if you do it correctly? In fact, what's really interesting is just withhold the taxes as you convert it over. So that way you don't know at the end of the year. Okay? The saddest part, y'all feel just for 1 second, is that a lot of advisors tell you that you'll just make enough to compensate for the tax liability. It's okay, sir, ma'am, it's okay. We'll make enough. We'll make enough. We don't want to give any money to the IRS right now. But let's be honest with each other. I know you don't have the time to look at all of this, but I do. Okay? So here's a question. How are they going to compensate for 20 to 30%? Are you crazy? How are they going to make you that much money to compensate for all of that tax liability? What about inflation, when you have to keep taking more and more and more out? I won't even go there. Okay? I'll just agree to disagree with what you've been told previously. Okay? Now maybe you're saying in your mind, so what, Joseph? What does this mean to me? Well, here's what it should mean to you. Okay? Do not miss this part. This is the most important part of the video. Okay? Are you ready? Do you remember when I told you about Social Security becoming taxable? Here's a quick example of it becoming 85% taxable. By the way, did you even know that could happen? Did you know that your Social Security would even become taxable? Most people don't. Okay, so let me show you an example. Okay, so let's just say that a married couple makes $40,000, okay, in their Social Security payments. All right? You could say, well, Joseph, I make $70,000 between my wife and I, or we're going to make 50 or 60. I understand. I'm just using this as an example. So 85% of 40,000 is 34,000. So this 34 will slide over and it will become taxable to you at some point in the future. Okay? If you don't do this the way that I'm recommending. Okay? So let's just say you pay taxes at a 25% tax bracket. Let's just pick somewhere in the middle at 25%. Okay? 25%, 34,000 is 8,500. And guys, watch this over and over. If you need to do this again, it's not a problem. So let's just say you and your wife are going to live 25 years. Okay? Just as an example. So what's 8,500 times 25 years? Done the math for you. It's 212,000. $500. Okay? It's extremely important that you guys know this. It's so important. If you're going to give this away, give this back to the IRS accidentally, that's okay. If you want to give them money and you enjoy giving the IRS money, sure. But if you don't want to do this, then you need to consider changing some things. And that's why I need to talk to you.